Good morning, everybody. It is Monday, August 29th, 5:43 a.m. Central as I speak here. December corn futures up 7.25 at 671.5. November soybeans down 17.25 at 14.44. December Chicago wheat down 7 cents at 798.25. December Kansas City wheat down 9.25 at 873. December spring wheat down 7 cents at 902.5. If you guys are listening on the podcast, appreciate it. Leave me a review on that Apple app if you wouldn't mind. Could use some more reviews there. If you're watching on YouTube, guys, make sure you subscribe to the channel. Hit the like button. Leave me a crop update. Let me know what you think about these crop tour results that I'm going to talk about here in a second. Do you think it's the real deal? Do you think they're off? And if so, for what reason? If you guys would like some additional information from me, go to my website, www.standardgrain.com. Check out my premium subscription service today. I send my premium subscribers a ton of information direct from me every single business day. Morning email goes out about 5:30 a.m. Central. In that email, you will see every overnight headline you need to be aware of. Charts, graphics, weather info. My daily subscriber-only videos are part of this deal. On Friday, I talked about headlines and how headlines can affect the markets and some of the things that I've learned over the years about headlines and markets, how the two kind of intertwine. If you guys are interested in this sort of content, sign up today. $50 a month, cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. So the biggest news out here in regard to the markets, I think, are these pro-farmer yield estimates or crop estimates for corn and soybeans. And the corn numbers is really where the excitement is. So pro-farmer pegged the national corn yield at 168.1, crop nationally at 13.759 billion bushels. I snagged a couple of their graphics here for the video. I hope they don't mind. So this is, if realized, if you believe these numbers, this is incredibly bullish. This is a crop estimate that is 600 million bushels lighter than USDA's current estimate. If this is a number that's confirmed, it's very bullish. It's going to lead us to a rationing scenario. It probably means we're underpriced at current values. When you look at the state-by-state estimates, ProFarmer was lower than USDA in every state that they toured, I believe. So this is friendly stuff. One thing that is noteworthy to me, at least, is that I have never, in my experience, I've never seen the market trade the crop tour the way that it did last week. Typically, I feel like the market is kind of agnostic toward the tour, like it doesn't care a whole lot. And I actually did a video last week where I went through and I talked about what December corn futures typically do during crop tour week. And more often than not, they move lower. And when they do rally, they don't rally very much, as you can see from this graphic on my screen. Barring this year, over the last 10 years, that the best week for December corn during crop tour week was 2013, when it gained 6.5 cents. December corn gained 41 cents last week, guys. So that's the best performance in a crop tour week for the December corn contract of the last 11 years by an extremely wide margin. So this year was very different from previous years in my experience in that the market very, very actively traded this. And it's for a couple of different reasons. First off, the estimates were well below, of course, any estimate out there. This is the lowest crop estimate that any well-followed group has right now for the U.S. in regard to corn production that I'm aware of. And secondly, you've got a tight situation. You've got a situation in which we really can't tolerate a yield number this low or a production number this low. So the market's extremely sensitive. So yeah, this is quite a bit different than anything that I've seen. Now, moving forward here, the question again is does the market believe this? And I think given the price action, the market believes it to some extent. In September, on September 12th, USDA will provide us with its next crop update. And in the September report, USDA uses what they call objective yield data. The August report is just survey-based. In September, they use objective yield data. So that'll be your next update from USDA on September 12th, and that should be a very big report, I think, this year. When you look at the soybean production estimates, not nearly as exciting. ProFarmer pegged the soybean yield at 51.7, which is just slightly below USDA's most recent estimate. Their crop estimate, however, is slightly higher versus USDA because Pro Farmer tacked on 500,000 acres in regard to soybeans due to that FSA report we saw last week. So the soybean numbers not nearly as exciting. Still a lot of potential here. There were some rains over the weekend that could maybe make a difference. So the big excitement definitely in the corn numbers and not so much in the soybean numbers. And again, thank you, Pro Farmer. I stole your graphics. I hope that's all right with you guys. Large money managers, the funds continue to build length in the corn market. Fund traders were net buyers of 33,000 contracts of corn during the week ending August 23rd. So that doesn't even include the late week action and rally that we saw. So this net long in corn about 176,000. That's not super extreme or anything, but it's getting to be a large position in the historical context of things. Funds were net buyers of, was it 9,000 contracts of soybeans, I believe? Yeah, 9,000 contracts in the week ending last Tuesday. This net long of 111,000. It's getting up there. It's not extreme. Funds are now net short 29,000 contracts of SRW wheat. They were net sellers of 7,000 contracts on the week. And this is the largest net short in the SRW wheat. You got to go back to February, like pre-Russia, Ukraine. So funds are building some length in the corn market in particular. Now, this still pales in comparison to where the fund long peaked during this current bull market. And your current bull market, the way I see it, began second half of 2020. And since the second half of 2020, the largest net long that funds have held in corn was 397,000 contracts back in April of 21. So we're still way below that here at 176. But the funds have been, more aggressive buyers here of row crops recently. We had some weekend rains over Iowa, parts of Minnesota, Wisconsin, Illinois had some scattered stuff, Indiana. Kansas caught some decent rains in the central to eastern half of the state, especially Oklahoma, a little bit, North Dakota, a little bit. Radar this morning, kind of quiet. There's a system over say northeast Indiana into Michigan, into Ohio this morning, and really not much anywhere else. The next 7 days favors rain in the eastern Corn Belt, and really not much elsewhere. Dry for Iowa, dry for the Dakotas, dry for Minnesota, Wisconsin, dry for Nebraska, most of Kansas. Some of these areas of the West will see rains return, say like early next week, the way that it looks. But for the next 7 days here, kind of dry. I'm not seeing anything in terms of a frost threat out there. Not any extreme cool temperatures on tap based on the models that I looked at this morning. Ukraine's grain, or here's the 6 to 10, I'm sorry. Ukraine's grain exports are down more than 50% so far during the 22-23 marketing year. The country's ag minister said that total grain exports since the beginning of the new marketing year on July 1st totaled just 3.6 million metric tons. That's a decline of almost 53% versus the same period last year. A total of 2.3 million metric tons of corn, 981,000 metric tons of wheat, and 289,000 metric tons of barley have been exported. Exports in August month to date are down nearly 60% versus the same period last year. So, Ukraine is moving grain. I mean, they've got this UN brokered shipping program that I think has been a little bit more successful than a lot of people expected, but still you've got problems due to this ongoing war. They're just not going to get back to normal anytime soon. Farmers in Ukraine should be planting winter wheat right about now through September. I haven't heard much there in terms of progress updates or anything like that. Some sources indicating recently that Ukraine and Russia are offering wheat at much lower values versus the U.S. on the export market. Russia's got a monster crop, and I've discussed before about the issues regarding exports. There's some businesses that are just hesitant to do business with Russia, but the UN is trying to fix that as well. U.S. stock market fell sharply on Friday amid hawkish comments from Fed Chair Jerome Powell at the Jackson Hole Summit. The Dow Jones lost 1,000 points, or about 3%. The S&P 500 lost 3.4%. The NASDAQ lost nearly 4%. Some pretty hawkish stuff from Powell here. Here's a couple of the quotes. While higher interest rates, slower growth, and softer labor market conditions will bring down inflation, they will also bring some pain to households and businesses. These are the unfortunate costs of reducing inflation. But a failure to restore price stability would mean far greater pain. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. So you got a lot of stuff here that sounds bearish. He said the word pain twice, which I don't think the market liked. Talking about price stability, talking about not prematurely loosening policy. So this was seen as bearish, the stock market, and the stock market acted accordingly. The cattle market was marginally lower in live cattle, lower in feeder cattle on Friday as well. Cash trade was, I believe, 142 in the South, mostly some 147 in the Western Corn Belt on Friday. U.S. dollars just a little bit higher. The S&P is down 35 ahead of the cash open. The Dow Jones down 260, so some more selling in the stock market. Bonds off almost a full handle. Gold's off $10. Crude oil is up 51 cents at 93.59 in the October WTI. Have a great week, guys. I will talk to you Tuesday morning.